Hello and welcome to the stock market analysis. Let's continue to look at the S&P 500. Now, this is a futures chart, and well, yesterday we had a kind of doji type of pattern. As you can see, the reason why there was a doji because there was support area here and there was indecision, but the stock did not even rise when the market did not even rise to at least half of the red candle, despite there being support around his area, and this shows bearishness, and today we have a continuation of the sell-off. So support is very near, that we might go down a bit and then bounce out a bit. That is not unusual, and the next area of nice support will probably be around here, maybe a bit of support around these 4 candles here. Now, some things that are not good is that stock breaks below an uptrend line, has gone below the 20 MA and 50 MA, and there's something not very positive usually. And when we look at the 60-minute chart, it's still below the 200 MA, and that's why you must continue to be bearish, or at least be cautious. Don't long stocks, because 75% of stocks, they follow the direction of the general markets. Now, the S&P 500 is break below this consolidation area, so this will become a resistance. If it goes down, goes up, it might hit this resistance and continue to move down. Now, when should we be bullish? I would say that if you look at this 2-hour chart, at least you draw a downtrend line. If it doesn't go above this downtrend line, you should be really careful and not be thinking of long. So you can see even in the 2-hour chart, the 20 MA is declining, 50 MA is declining, and 200 MA is declining, which is very bearish, and you should be careful. You should be bearish and be cautious not to long stocks in the US stock market. Now let's take a look at the SPY. SPY also tells the same story. It mimics the movement of the S&P 500, right? So the 20 MA is curving down, maybe the 50 MA is getting flat, but the 200 MA is still rising. So this tells us that we have short-term weaknesses in long-term strength. So if it declines to about this area, or I don't know, or even if it meets the 200 MA, this could be a very good buying opportunity in the long run. Now, if we take a look at DIA, it's already below the 20 MA, below the 50 MA, something that usually you do not want to see. You can see that it has stayed above the 50 MA for a very long time until here, the very big bearish bar, and that's not something good at this moment. Alright, but something positive about DIA is that there is a lot of support here. So that is why we did not see it fall as hard as the S&P 500. Maybe it might go down a bit more, and we want to see if a bullish reversal pattern appears here. So if it just trades sideways and eventually drifts lower, this support will be eroded, and the next area to see will be the 200 MA, especially if there's a bearish cross going on soon. So this support area is very important. You want to watch it. And 60-minute chart of DIA shows that it is still in a very bearish downtrend below the declining 20 MA, 50 MA, and declining 200 MA. So you should continue to be bearish on DIA unless it can go back above this downtrend line and the 20 MA and 50 MA, and there's a bullish cross that forms. QQQs, well, after the negative rate bar, we kind of have a doji kind of pattern, and today it continues to fall. So if it has already broken below this support area, so the next stop might be here. So if you look at the 60-minute chart, you can see that the Qs already dropped below this consolidation, so we might see more selling. It's below the declining 20 MA, 50 MA, and 200 MA, which points to bearishness, and so you have to be very careful because it might go down to this area. So don't long tech stocks, be careful, stay on the sideline at this moment. And of course this will be resistance area as well. Okay, resistance, small resistance, bigger resistance here. Now let's take a look at that. SMH, semiconductors are challenging the 50 MA and looks like it does not want to hold. This is actually a continuation pattern where there's a large red bar, then a green bar that cannot even go above the top of half of the bearish bar here, and then once the selling goes below the lows of this green bar, it just continues goes down. So support, we want to see if 50 MA holds. If it does not hold, there's no bottoming tail form. By the end of the trading day, you might continue to see erode and go down and meet to this support area. So be careful with semi stocks at this moment, because if the SMH falls, a lot of things like NVDA, AMD, and so on will not be doing very, very well. Tech sector is not doing very well at this moment. You can see that the 20 MA is just curving down. We might have a bearish cross soon in the daily chart. Last time we had a bullish cross, we had a very nice rise, and if there's a bearish cross and the support here does not hold, like this is the support area. If we have a bearish cross and the support area does not hold, the tech sector cannot bounce back, we might see the next selling down to this area, and this will be not very good for a lot of tech stocks, especially Apple, NVDA, and so on, which are in the tech sector. So watch this support area and watch this support area. Now Apple is challenging this support area. This will be a very, very important support area for Apple, and also for the S&P 500, because Apple is quite a major component of the three major indexes. If this support does not hold, it will continue to drop, and maybe even drop to about here, which won't be good for the markets. Alright, so watch Apple very carefully. Declining 20 MA, 50 MA, 200 MA is still telling a bearish picture for Apple at the moment. Now consumer discretionary has kind of eroded. It has actually shown signs of topping some time ago, broke below the downtrend line, formed a double top, and when it broke below the 50 MA and 20 MA, things got bad. But right now it's sitting at the 200 MA and support here, so you want to watch this area carefully. If the support does not hold, 200 MA does not hold, you might see further selling down to this area around here. And consumer staples are also already very weak. It has already dropped below kind of uptrend line, might have a bearish cross soon, and if it continues to fall, might fall to the 200 MA. Basic materials are at the 50 MA support, but it doesn't look very strong to me. But you have quite a lot of support in the weekly chart, so that might help to halt the drop, right? And if it stabilizes here at 50 MA, you might see it bounce up a bit. There's quite a lot of strong support here, so something to think about. Now overall, the let's look at the gold market. Gold futures still trending higher, chugging higher, rising 20 MA. The price staying above the rising 20 MA tells us to remain bullish on gold markets, not bearish unless it drops below the 20 MA. And crude oil prices, well, we have a dip in group in oil prices right now. So let me draw this trend line. It's challenging this uptrend line, and looks like this support, previous high support, it's not holding very well. If it continues to drop below this support area and this uptrend line, we may see more weaknesses in oil, where it might drop to the 50 MA, and this might hurt a lot of oil stocks. You can look at Marathon Oil. Marathon Oil has already declined by quite a lot here because of weaknesses in oil, and also previous high resistance around here. And Bitcoin, all right, Bitcoin is not doing very well at this moment. It failed to break above this downtrend. It failed to break up higher. A failed triangle breakout. Now it's moving down and at the support area. And if this support does not hold, you might have a bearish cross, and then it might just decline and meet the next support area here, which might be around the area where the 200 MA is rising. So hope this analysis helps you. Continue to be bearish in the US stock market at the short term. We are in a short-term weakness in a long-term strength. So if you're a short-term trader, do be careful, be cautious, not to simply enter stocks unless there's a very good reason for you. So I hope this helps, and I'll see you in the next one.